Welcome to our new tutorial, Fibonacci numbers, finding harmony in financial markets. In this tutorial, we'll learn about Fibonacci numbers, their golden ratios, and how to use them and benefit them in financial markets. Let's go ahead on contents. Contents we have got introduction to Fibonacci numbers, how to plot various ratios on price charts, ratios like retracements and extensions. We'll learn about them, order retracement, order extensions, and what are important retracement as well as important levels of extensions. Then we'll learn about how to use Fibonacci ratios with oscillators to find reversals. Next is using Fibonacci ratios on time, just the way we use Fibonacci ratios on price. Similarly, we can use Fibonacci ratios on time as well. And lastly, we'll put it all together. So, introduction. Fibonacci numbers are gift of Leonardo Fibonacci, an Italian mathematician who lived in 1725 to 1850 AD. These numbers basically are derived by adding previous two numbers to each other. So Fibonacci numbers are 1, 1, next is 2, then you add 1 plus 2, you get 3, then add 2 plus 3, you get 5. So you just have to add previous two number to get a new number. Add 8 plus 5 to get 13, 13 plus 8, 21, 21 plus 13, 34, and so on. These numbers basically goes to infinity. But the real mystery lies in common ratio that these numbers share between themselves. If you were to divide any number by its previous number, you will find a common ratio. Let's say if you were to divide 55 by 34, you will get a ratio that is roughly close to 1.618. 1.618 is also known as golden ratio, and it is found in many formations of nature. If you want to study more about this golden ratio and its inverse ratio, that is 0.618, you can find a lot of material on Fibonacci numbers on internet. But for now, all we have to remember is 1.618, 0.618, and different percentage ratios that are derived out of these ratios. Let's go ahead. So basically, this golden ratio of 1.618 is found in our body part in a tornado. The way a spiral tornado, the way its formation is spiral, and formation of conch shells. Even in some of the mysterious formation, this ratio is found in harmony. Hence, 1.618 and 0.618, when it was applied on market, there were some beneficial results out of them. Especially this study was first started, no, was developed into depth by W.D. Gann. Is a very famous trader and a broker. You can learn about him and his methods and methods of Fibonacci ratios more, and you'll get a lot of material internet. But for now, we will focus on application of these ratios on financial markets. So following are the percentage ratios that are derived out of Fibonacci golden ratio: 23.6, 38.2, 50%, 61.8%, 78.2, 100, 127, 138, 161, 261, and 423.8. So basically, the ratios which are lesser than 100 are known as retracement ratios, and ratios that are more than 100 are known as extension ratios, as they are extending themselves beyond 100% of a price move. These are the important percentage ratios that we are going to work with throughout this tutorial. Let's go ahead and learn about retracements. When a market has moved up or down, it retraces back some of that initial move, be it an intraday move or a move lasting several months. Once a move has occurred, we can use Fibonacci retracement percentages to work out levels at which the move will retrace to. What I'm trying to say is, when a market has made a move, let's say it has moved from point A to point B, or 100 to it has moved till 200 in a straight manner for a whole month, it has moved straight upside without retracing back or without giving a single sell day. So after moving to 200, it founds resistance and it retraces back or starts falling down to 175 before it finds support at 175. So the move from 100 to 200 is initial move, whereas the move from 200 back to 175 is called retracement. These Fibonacci numbers, that is 38.2, 50%, 61.8%, and 78.2%, can be plotted to measure or to place the prices or to find out the prices where these retracement will halt or come to an end. Let's go ahead. How to plot retracement on charts. If you are plotting for a pullback from a high, select the retracement tool in your charting software. Then first select the lowest point in price. Next, select the highest point in price and simply click or plot it. You will see lines of various proportions plotted on charts. Those are Fibonacci ratios. Let's go ahead and see one of the examples of how to plot retracement on a chart. Following is a daily chart of BBTC and you can see the wave formations. Now, I want to know how much has price retraced from this point to this point. So I want to know how much this retracement, how much is this retracement of this up move. Okay, so this is the up move and this one is the down move. So I want to know what is the percentage of this down move. What I'll do is plot a retracement for it. Here is my retracement tool. You can see the name Fibonacci retracement. I'll select this tool, click on it, and then first click the lowest point. This is the lowest point. Click on it, hold and drag till the highest point here and leave my mouse button. You can see the retracement levels are plotted. 38.2% is on 413, 50 on 374, and 61.8 on 333, 334, and so on 78.6%. Here you can see prices pulled back till 50% and then it found a support zone in the level of 50%. You can see here clearly. Right, let me just change it. You can see prices have found support around the area of 50% of retracement. The retracement was calculated from this low point to this high point. Alright, so this is how a retracement is plotted for in an upward move. So in upward moving market, if you want to calculate retracement in AMI broker, I believe every other charting software will have similar method to plot a retracement or an extension. But in AMI broker, if you want to calculate retracement for an upward moving chart, all you need to do is find your retracement Fibonacci retracement button, click on it, click and hold the bottom, drag till the top and leave your mouse button. There you go, your retracement is plotted. Following is a chart of Tata Motors, and in this chart we are going to plot retracement towards the downside. This is the move. The market has moved down or lower and then it received a sudden pullback to this point before continuing its downward move. So I wish to know what is the percentage of this retracement of previous downward move. So all I will do is select my retracement button, click on it. Now since I am plotting retracement towards a downward moving market, in here I will first select the top button, the toppest point, click on it and drag to the lowest point. This is the lowest point. The low of this bar is the lowest point, and you can see my retracements are plotted and prices found resistance in the zone of 78.6 and 61.8. So prices breached 61.8 but failed to breach 78.6. This is how a retracement is plotted in a selling market. All you have to do, just clear it out completely quickly. Alright, all you have to do is select your retracement button, click on the top, drag till the bottom and leave it, and your retracement ratios are plotted. So now that we know how to plot retracements, let's go ahead and learn what are the important levels of retracement. Retracement means prices taking a pause or cooling off. An ideal retracement is 50% retracement of previous price move, or a stock giving up 50% of its price gains. That can be ideal retracement. From thence, the stock will might turn around and go ahead to make a new high. Though many a times prices have found strong support at 61.8% as well. Extreme level for any price retracement is 78.2%. Any retracement beyond 78.2% loses its validity as a retracement. Then one cannot be sure of the price move, if it is a retracement or if it is a change in trend. The last level to look for a retracement would be 78.2%. Any price change or a price move stretching beyond 78.2% may not be a retracement and might be a change in trend. Often you will find retracement to 38.2% as well, but most traders call such retracement as shallow retracement. It is mostly found in strong trending market, but when you try to trade it, 38.2%, a retracement to 38.2% is not that reliable for trading. Hence, your best partner in your trading method would be 50%, 61.8%, and 78.2%. So following is a chart of NMDC, and as you can see the chart looks in a downtrend, and it has come down for almost 2 months or 1.5 months. Now it has started to retrace. Now I wish to know what would be the point where this retracement will terminate. So I'll plot a retracement, Fibonacci retracement. Since this is a selling market, I will use top to bottom approach. And you can see bottom is considered as 0%, followed by 38.2, 50, 61, 78 and 100% of the price. Now prices have found minor support or minor resistance at 38.2%. I wish to know till what is the level where this retracement might terminate. Let's go ahead and see what happens next. Let's add some bars. You can see price has breached 50 and reached 61.8%. There is a reversal day, and it seems like prices have found resistance at 61.8%. There you can see it goes ahead to make a new low. Our next chart is of Sun TV. As of the last bar, you can see prices have fallen violently, and now prices have found a minor support at 400. Now I wish to know what will be the percentage of retracement that prices will make before it resumes its downtrend. So what I will do is place a retracement levels, select the top, drag till the bottom, leave it. There are my retracement levels: 38.2 at 427, 50 at 436, 61.8 at 444 and so on. Basically, you can see prices have made an attempt to breach through 38.2 and it was unsuccessful on 31st July 2014. Alright, let's go ahead and add some bar and see what happens next. Prices tries to breach 38.2 again and have found resistance again, and prices break down to make a new low. You can see. So prices found a resistance at 38.2%. Our next example is a script called take, and you can see prices have moved exceptionally from this low to this high, and as of the last bar, prices have retraced back some of its gains. Now we will plot our retracement levels to see what level will act as a support zone for these prices. So since I'm plotting retracement for an upward moving market, I'll first select the bottom, drag till the top and leave. As of the last bar, prices have breached below 38.2% and moving towards 50%. Let's add some bars and see what happens next. Prices touch 50. You can see prices have reversed the next day, thus indicating that prices have found support at 50% zone. Let's add some bars and you can see prices indeed found support at 50% levels. So prices always tend to find support or resistance at important retracement levels like 50%, 61.8%, 78.2% and sometimes 38.2% as well. Now that we have learned about retracements, what are important retracement levels and how occasionally prices find support on these retracement levels and change their direction or resume the previous trend. Let's go ahead and learn about Fibonacci extensions. After retracing or cooling off for some time, prices resumes its previous move and go ahead to make new high or new low. With the help of Fibonacci extensions, we can find levels where this new move might terminate or find resistance. Important extension numbers are 127.2%, 138.2%, 161.8%, and 261.8%. Finally, 423.6%. So how to plot an extension? Fibonacci extensions are plotted in similar way as retracements. To plot extension for a new high, select extension tool in your charting software. In most charting software, extension ratios are included with retracement ratios. So its plotting is similar to plotting retracements. Let's see some of the examples of plotting a retracement. Plotting extensions. Following is a chart of Tata Motors and you can see two arrows, one indicating a top, another indicating a bottom. Now we will plot an extension ratios from top to bottom to plot extensions for these price changes, right? So I'll select my retracement tool, but I have made some changes in the retracement tool. You'll come to know. I'll select the top price, drag till the level of bottom price here. I'll stretch it so that the lines cover everything. Like if I was to plot here, you can see the lines extend only till this level. So if I was to select this and stretch it, you can see lines expanding and lines cover larger proportion of area. So this is the range, and for this range I seek extension for prices in future. Alright, this range is from 28 November 13 to 2 April, I'm sorry, 28 November 13 to 4 Feb 2014. For this range of price, I plot extensions in the future and you can see prices first found resistance, making a double top in the zone of 138.2 to 127. Then prices found resistance on 161% as well, you can see, and then prices found resistance at 261.8 level as well. It tried to breach it several times but failed. So this is the same Tata Motor chart, and as of the last bar, prices have made a new high that is breached above its previous high made on 28 November 2013. Okay, now I wish to know where these prices will find resistance or where this upward move might terminate. Alright, so what I'll do is, for now I'll delete this. I'll use my retracement tools from top to bottom and plot various extensions. The first in line is 127.2% extension, followed by 38, 161, and then 261. Okay, we cannot go in the future because there are no bars right now. I will add bars and we will see what happens next. Zoom in a bit. Let's go ahead and add some bars. Prices found resistance but not at 127%. Pulled back. You can see prices have found resistance and prices are making double top in the region of 127 and 138. Finally they breach and reach 161.8%. Fall down. Let's expand this ratio. Okay, now let's go ahead and add bars. Price are continuously finding resistance at 161, but finally they break through 161 and go till 261.8. Find resistance at that price as well. Breach, fail, and fall down. Alright, so you can see every time a price reaches one of these Fibonacci number levels, they respect these levels and find somewhat resistance on these levels. Next is a chart of Avan offshore, and as of the last bar you can see prices have made a new low, breached below this low. Now I wish to know how far these prices might extend themselves before finding a resistance, and sorry, before finding a support and changing their direction. So I'll select my retracement tool and use low to high and plot my extensions. Let's go ahead and see, add some bars and see what happens. Prices have found support at 261, intraday support. You can see as it opened around 650, fall down till 536, but it pulled back as well and has recovered more than 50% of the daily range to close at 590. Let's go ahead and add some bars. You can see it found twice support at 261%. So plotting extension is similar to plotting retracements, and extensions are used to understand levels where a trend might terminate, whereas retracements are used to find levels where a correction might terminate. Let's go ahead. Important extension levels. Extensions are plotted by taking help of retracements. When the trend resumes in initial direction after retracement, extension level can help us finding out termination of new trend. Among the important ratios, ideal ratios for termination of trend are 127.2% and 161.8%. These are the ratios that are most widely used by traders to book profit once prices have made new high or a new low. Where 127% and 161.8% are used by seasonal traders to book profit, you will also find prices finding support or resistance at 261.8 and 423.6% extension levels as well. These levels are rare in market. The frequency of finding support or resistance on these ratio is rare, but when they do, trend to start in a larger counter trend move. Alright, once prices find support or resistance on these levels, the counter trend move that presumes after finding support is much stronger and much more powerful. Alright, following is a chart of ACC. It's a daily chart. As of the last bar, you can see prices have made a new high. That is, prices have breached above 1400 levels where it had found resistance twice in the month of April and March. So let's plot extension levels to find level where prices will reach before finding resistance and giving one more retracement. So if you had bought or if you were a buyer at the region of 1300, you might want to know the levels where prices might find resistance and the current trend, that is the upward move, the spontaneous upward move might come to an end, give way for a correction. So we'll plot our extension levels. You can see 127% at 447, 161% at 1498. Let's go and add some bars. There you can see prices have breached 127%. Now 127% level is mostly used by traders, many traders, to book profit, as they have seen after prices hit 127 to 138 range, prices always tend to find correction or prices always correct themselves, thus giving away some of the gains. You can see there is a reversal day and prices start into correction after hitting 127% level. Our next chart is chart of Apollo tire, and you can see as of last bar prices have fallen down from the level of 245 where it has somewhat made a double top. Here you can see it has made a double top and fallen down. Now if prices were to break below this low, I want to know how far prices might go before turning around, or what are the levels from which prices might change the direction. So I'll go ahead and plot extension levels here, and it seems 127% is at 205, 161 is at 195. Let's go ahead and add some bars. Prices fell and hit 127%. Price changed that direction. You can see prices have changed, found support at 127%. Now let's go ahead and take a look at some examples where 161% has come into play. Alright, in previous two charts, we saw how 127% served our purpose in finding support and resistance. In next two examples, we'll learn about 161%, how prices find resistance at these levels too. Let's go ahead and add our extension. 127 lies at 18.15, 161 at 18.9. As of the last bar, prices have made a new high. I wish to know how far this newfound uptrend will last before prices decide to change their direction or find a minor resistance. In the meanwhile, we can also see that prices have made a previous high at level of 18.9. All right, on 11 May 2013. So our 161% coincides with the top made in the month of May. Let's go ahead and add some bars. You can see prices burst to the level of 161, broke our previous top, but the next day it gave a reversal day, or a day that suggests heavy selling dominated the buyers. thus making us cautious of this level of 19. Let's go ahead and add some bars and see what happens next. You can see prices found correction. Our next example is a chart called rail gold. As of the last bar, you can see prices have made new low, and on the last bar prices fell down violently. They opened gap down, and then the whole day they kept falling down. Now I wish to know the level where prices might find support. So I'll plot my extensions from bottom to top. Prices have already breached the level of 127. 161 lies at 2396. Let's say 2400. And then we have 261 at 2150. Alright, let's go and add some bar. You can see prices touched 161% in intraday and gave a positive close, thus giving a reversal bar of suggesting that prices have found support at 161%. Let's add some bar to see if the support really stronghold itself. You can see prices breach 161, but eventually they turn around. So 127% and 161% are important level of extensions. These extensions are mostly are some of the common extensions used by traders to look for booking profits. I've already said 261.8% and 423.6% are rare extension levels in market. I mean, prices very few times tend to extend themselves to these levels, but whenever such an extension happens and if prices find support or resistance on these levels, the change in trend that ensues from there is much more powerful, and prices go a long way before terminating the newfound trend. Let's go ahead and look at some examples. So following is a chart of Reliance Industries, and as of the last bar you can see prices have made a new high. Alright, now I'll go ahead and plot an extension level to see if I found any level that is important for the change in price trend. I'll have to select a swing to do so. Now the lowest low was triggered on this price range. Lowest low is 763.9, made on 28 August 2013. After that, you can see here, this is the lowest low. After that, prices made swings, but after this low, the largest swing was this, lasting from here, lasting from the month of November, 1st November to 26 Feb, 28 Feb. So I'll use this swing to plot my extension level here. As of the last bar, prices found resistance on 127%, but as of the last bar, prices have breached the level of 127% and is moving up. 161.8 stands at 1010 and 261.8 stands at 1046. Let's go and add some bars and see what happens next. Prices break above 161%, making it clear that prices are not interested in finding resistance at 161, whereas they want to go ahead. So we'll go ahead with price and see. There you can see prices made a high at 261%, but the bar when prices struck 261% is red in color, suggesting that the close was below its open or it was a negative trading day, which means prices have found resistance on 261% levels and changed negatively. Now, as I have said, if prices ever found resistance at 261%, the price change that ensues will last longer. Okay, the counter trend that starts from these levels of 261 and 423 last much longer. Let's go ahead and see what happens. There you can see prices found resistance at 261, and that resistance gave a result to a downtrend or a sideways falling market. So our next example is PFC daily chart, and as of the last bar you can see prices have broken down to a new low, breaking below the level of 170. I'll plot an extension ratio to see how far prices will go before terminating this downtrend. Right, at some bars prices have found minor resistance and broken down to a new low. Prices straight away broke below 161%, and you can see prices broke below 261% as well. But then it found support 100 rupees, which was very close to 261%. Now prices seems to have changed their direction. Let's go ahead and see if prices sustain these levels. They come down to test 261. Prices have made double bottom. You can see at the level 261 and 100 rupees, and we can say prices have sustained the level of 100 and found a support in the zone of 261% extension. So we have seen how 261% retracement is powerful, and when prices find support at that levels, the change in trend is much more sustained. Now, following is a chart of sale, and what do you think of this top? Take a look at this chart here. Do you think this top has any important level? 268, 61, or 423? Because this was the top that was made in 6th June 2014, and as of today, as of 14 Jan 2015, the prices have not yet reached to test that top. So this was an important top made. Now, were there any hints that would warn you that this level is going to be an important level? The only way to know that is to plot extensions. Alright, our first extension will be of this larger swing, the bottom, and there you go. Prices, the top was near to its 261% zone. Is there any other extension that would warn us that this 110 rupees is an important level for sale stock? The only other correction left is this minor correction. So we'll go ahead and plot an extension of this minor correction as well. We'll zoom into it, right? And take correct values here and here. Zoom out and bingo. You can see prices terminated exactly at the level of 423% of this minor correction. So was 110 an important price range? Yes, because 261% of this major correction came at 110 level, and similarly 423% of this minor correction came at this level as well. You can see prices touched these levels and sold down. A new trend ensued. So 261.8% and 423.6% are rare levels. Market doesn't always find support or resistance on these levels, but whenever they do, the change in trend that ensues is much more powerful and stronger. Now that we have learned about Fibonacci ratios and extensions, let's go ahead and learn about their practical applications. Fibonacci ratios can be used to find end of a price move. These ratios can be combined with oscillators to make entry once price changes the direction. We can combine these ratios with different trading strategies, and add to the edge of their performance. Let's go ahead and take a look at some example. So following is a daily chart of PFC. I have added a stochastic oscillator to this chart, and as of the last bar, you can see prices have retraced back and stochastic oscillator has reached below its oversold zone. Okay, if you are aware of stochastic oscillator, then when stochastic oscillator reaches below the level of 20, it means oscillator has reached an oversold zone from where prices might change their direction or prices will go sideways. Okay, so how can we add to this setup? Like prices have trended upwards, that is for sure, and prices have retraced back. And stochastic oscillators suggest us that this is a level where prices will stop going downwards and they might go sideways or they might change their direction. Is there anything else that we could add which will assure us that prices will find support at these zones? So for this reason, we can use Fibonacci retracement to add to our trading system. So let's go ahead and plot Fibonacci retracement to see if the current low is at any valuable level. So let's go ahead and plot our extensions. Plot retracement, bottom, top, and leaf. And there they are. So you can see prices have touched 50% retracement, and as of the last bar, prices have given reversal, suggesting that prices have found support at 50% retracement of this previous trend, right? And stochastic oscillator is already saying that prices might change their direction from current levels. As of the last bar, oscillator has given a crossover. You can see pink stochastic is at 1550, whereas this beige colored stochastic is at 1392, which means fast stochastic is above slow stochastic, giving a bullish crossover and telling us to go long above 280. So we'll place line above 280. Let's go ahead and add some bar and see what happens next. So next day trade is triggered at 280. We'll add some bar and price go ahead to test its previous top. Thus prices change direction after hitting 50% retracement. We combined Fibonacci retracement with stochastic oscillator. Thus there were two things telling us that prices might find support at 260 and change their direction. First one was stochastic oscillator when it reached oversold zone, and the second reason was supported by Fibonacci retracement when prices hit 50% retracement. Our next example is Oberoi Realty daily data, and you can see as of the last bar prices have retraced from their upward move and stochastic oscillator is below 20, suggesting that prices may change their direction or price may go sideways. We don't know, but we have a reason from stochastic oscillator to look for a buy trade, and since prices have retraced, the preceding trend is an uptrend. Thus if we look for a buy trade, then we are on the right side of the market. Let's go ahead and plot retracement to see if there is an important level. Here as of the last bar, prices have hit 61.8% retracement. Okay, let's add some bars, and prices found support at 61.8% retracement, which is supported by this strong positive close day. And with this strong positive close day, stochastic oscillator has given a bullish crossover, so we can place a long trade to stop out, a long trade, a buy stop to buy above current bar high, which was triggered the next day. We place our stop loss on this swing low and we are looking for at least the high of 234 rupees. Let's go ahead and add bars, and stock took out the high. So there were two reasons that suggested us. One was stochastic, which suggested us that market has already come down in oversold zone, and then we had Fibonacci numbers or Fibonacci ratios that told us that this price level might be important. The third reason was 200 level itself. Remember, whole numbers like 100, 200, 300, 400 always act as a psychological support and resistances. Our next example is a daily chart of MBL Infra, and as of the last bar, prices have retraced from an upward move. Stochastic oscillator is just above the level of 20. This is the level of 20. Once stochastic oscillator reaches below 20, we know prices have reached its oversold zone. We will also add our retracement levels to see if prices hit any important retrace level. As of the current bar, prices is very close to 50% retracement level. We'll add some bars. The next day prices hit 61.8%. Add some more bars. Prices gap up, suggesting that 61.8 has acted as a support, and as of the last bar, stochastic oscillator has given a positive crossover, suggesting that we can go long above that bar high. Now stochastic oscillator is very close to 20, level of 20. As we have said, once oscillator reaches below the level of 20, we should consider it oversold and prices must find support or must trade sideways. Nonetheless, stochastic is very close to 20, so we will consider it as in the region of oversold, since our assumption or our exception is strongly supported by Fibonacci level of 61.8%. We will assume that prices have hit a support zone and will look to go long. The next day, long entry is triggered. Let's add some bars. Prices go ahead to make a new high. Thus you can see how important Fibonacci ratios retracement can be once combined your own trading strategy or different trading strategy. Our next example is a chart of NSE 500, which is also known as it consists of 500 well traded stocks on NSE exchange, or our country's 500 most important performing companies listed on NSE exchange. So as of the last bar, you can see stochastic oscillator has reached in oversold zone, but NSE, but the stock as of last bar continues to fall. We'll plot our retracement to see if any important level might act as support. Prices are very close to 50%. Then we have 61 at 6,500 and 72 at 4313, 6413, I'm sorry. Now I already said round numbers act as important support and resistance, so 6,500 might as well act as a strong support, but we don't know. Since 61.8 is an important retracement ratio, I would bet 6,500 will act as a support. Let's go ahead and see. Prices have reached 65. Prices fell below 65 and hit 72.8 and recovered strongly. You can see it has hit 72.8. Remove 61 so that we can see it clearly. You can see prices hit 72.8 and recovered strongly, suggesting that 72 is acting as a support. That is, prices found support at 64, not at 65. Nonetheless, As of the last bar, stochastic oscillator has given a positive crossover, suggesting if prices trade above this level tomorrow, we can go long. Let's add some bars, and there you go. Prices gapped up, suggesting, confirming that 72.8 did act as a support zone. Add some bars and see what happened. You can see prices traded upside. Thus, Fibonacci ratios can be mingled or combined with simple trading system, and you can see how powerful Fibonacci ratios can be when attached to other trading systems. We have learned trading retracements with other oscillators. Let's go ahead and use extensions along with oscillators or other trading systems. So extensions can be used along with oscillators to find tops and bottoms. Though it is often said that one must never look to trade tops and bottoms, but given enough reasons, it would be safe to trade such setups and get early entry and a potential for big profit if prices were to reverse. Let's get some rules laid down. If you are to trade with extensions and oscillators, consider the direction of higher time frame. So if we are trading on daily chart, we will consider the direction of weekly chart. We will use some oscillator or some momentum indicator to identify the direction of weekly chart, and we will place our trades or will look for direction of weekly on daily charts. So consider the direction of higher time frame. Prices make new high or low after retracing and have reached one of the key extension ratio. So our second point or our second rule is that prices must make new high or new low after retracing. Okay, after retracing they have started their trend, the trend is resumed, and they go ahead to make a new high or a new low, and in doing so they have hit one of our key extension ratio. Take a reversal trade if prices were to change direction. An oscillator gave an entry from overbought or oversold zone. Let's go ahead and take a look at some of the examples. Following is a daily chart of NSEIT, and as of the last bar, you can see stochastic oscillator has reached oversold zone, suggesting there is no more downward momentum in the daily chart. Let's go ahead and take a look at weekly chart. So this is weekly chart of the same script. As of the last bar, MACD is positive and MACD line is above its signal line, suggesting that there is some upward momentum left in the market. So we have a positive sign from MACD on weekly, which tells us that market will go towards the upside. Market favors, weekly chart favors the upside. So on daily, stochastic has reached oversold, telling us there is no more downward momentum left in the market. Now we will go ahead and plot an extension to see if there is any important level which would act as support. So I've plotted my extension on the chart, extension ratio, sorry, Fibonacci extensions on the chart, and you can see prices have hit 161.8 at 10,658 level, and as of the last bar, prices seems to have found support at 161.8% retracement level. Since weekly is favoring higher side or higher highs, or weekly is favoring the bullish side, and daily suggests us that there is an extension level where this newfound downtrend might terminate, and prices itself have respected that level. So I think it is safe to take a long trade. I'll go ahead and delete 127 to make chart more clear. Double click Fibonacci, deselect 127, click OK. There 127 has vanished. As of the last bar, stochastic has given a bullish reversal, so we can take a long trade if price were to trade above this high. Add some bar. Bullish reversal continues, long trade revised to this new high of 10,800. We'll take at long at 10,800. Next day, prices opened at 10.9 and sold down. We will assume that our long trade was triggered at 10,800. I will place a stop at 10,600. Okay, what is our aim? Since weekly is favoring the bullish side, our aim is 11,600 or a new high, or we will be stopped out at 10,600, any one of it. Okay, we have a stop of 200 points and a target of almost 800 points. Let's go ahead and see what happens next. Now, before doing so, the extension ratio of 161 suggests that this will act as a support zone. Okay, it will act as a support zone. Stochastic suggests that from here onward, stock will move on the upper side. So we have a lot of reasons to take this as a bottom created, and the stock will change its directions. Let's see. There you can see stock went ahead to make a new high. So given adequate reasons, it will be safe to pick tops and bottoms. Okay, given adequate reasons, we had adequate reason, we had the higher momentum in our favor, so we decided to take or fish out the bottom, and we were successful in it. Let's go ahead and see one more example. So our next chart is Reliance Industries. As of the last bar, oscillator has reached over pot zone, suggesting that the upward momentum has ended. Weekly Reliance chart favors the bearish side. You can see MACD is trading below its signal line and histogram is negative. So higher time frame suggests favors the bearish move, and daily is telling us there is no more upward move left. We will plot our extensions to see if there is any important level where we might look for an entry. I'll use this retracement, select extensions, remove out retracements, and click OK. You can see as of the last bar, 3 days ago, prices have hit 127% at 1033, and as of the last bar, stochastic has given a bearish reversal or a sell trade. Once stock was to trade below this low, we will take a sell trade where our stop will be this swing high, and we want at least this low of 970 to be removed. So maybe stock will turn from after hitting 127, maybe stock will give us a false trade and continue with its upward move. We don't know that, but what we know is higher time frame is favoring us, and so on lower time frame we can look to find a top. Okay, let's go ahead and add some bars. Prices make a new high, but we are not triggered into the trade as of yet. Stochastic oscillator has turned up, so prices fall below and oscillator has given a sell trade again. Next day the sell trade is triggered, so our sell trade is triggered here with stop of this level, and it seems prices have found resistance at 127% level. Okay, I'll remove this extension for now. I'll go ahead with our trade, and you can see prices took out this low to make a new low. So once these extension and retracements are very powerful tools, once they are combined with more reasons, you can come up with a very strong trading method which has an edge. So we have learned about retracement and extensions on price charts. Next, we will learn how to apply retracement and extensions on time charts. As various ratios and various extension ratios act like support and resistance on price charts and price levels, similarly, these ratios can be used on time levels as well, which will help you understand or help you give a tight time range when prices might change their direction. Isn't that exciting to know beforehand when prices might change their direction? Although not 100%, but to some extent, Fibonacci ratios can be used to determine or to forecast when prices might change their direction. Retracement on time charts will be helpful to understand when a correction may come to an end. Similarly, extensions will be helpful to understand when termination of a trend might occur. Let's take a look on some examples and you will learn and you will understand what I am trying to say. Time retracement are plotted similarly as price retracement, just that in price retracement we take a price range, whereas in time retracement we take a time range. For example, in current chart you can see the last valuable retracement came ended on 19 May 2014. From there it started going up and finally made a top at 19 September 2014, and then it from there it came down till 12 16 December, I'm sorry, 17 December 2014. Now was there a way how we could know where the prices might end their correction? In order to know that, we will plot time retracements. Alright, this is my time retracement tool. Fibonacci time retracement it is named, you can see. Now in AMI Broker you will find time retracement tool, but if you are using any other software, I believe and I think there must be a time retracement tool in that software as well. Alright, in order to plot time retracement on AMI Broker, all you have to do is select this tool, click on the start range of your time. I will take this low and drag till the end range of your time, that is this high, and leave your mouse button. There you go, your time retracement are plotted. I'll make it a bit more clear, keep it thick, thick and thick. Okay, so you can see there are three ratios plotted on the chart. One is 38.2, other is 50, and the last one is 61.8. Of these, 50 and 61.8 are most important and powerful ratios, and even to some extent 72.8% is also helpful. Nonetheless, we'll concentrate on our current chart. You can see prices made a low on 17 December and our time retracement ratios suggested that prices might make a low on 12 December. And what happened is Prices made a low within 4 bars of 12 December. Isn't that powerful? To know beforehand when prices might make a low. Now combine this time retracement with our price retracement tool. What we'll do is use our price retracement tool to see at what price level prices might terminate. The trend might terminate itself. You can see prices hit 50% on this day and then started trading in the range of 50% around it, finally making a low within 3 bars of our 61.8% time retracement value. Isn't that powerful? Prices makes a low at 50% price retracement and 61.8% time retracement. Thus, price and time both are telling us when prices might change their direction, and within a week or two, prices have changed their direction and started moving upside. So, if used sensibly, these tools are much more powerful than we think. Our next example is sale, daily chart of sale. As of the last bar, sale looks like it is drifting sideways, but I am interested to know if I could suggest this top. If I could have made out this top beforehand, alright. So what I'll do, first thing I will place my price retracements to see what was the level of this top. You can see the top was made at 50% retracement level. Alright. Next, I want to know if I could suggest this top with time retracement. So I'll go ahead, select my time retracement tool, click at the start of the time range and end of the time range and leave it. There you can see the top was made one day after 50% time retracement. Okay, 50% registered suggested that the top might be made on 27 November, whereas actual top occurred on 28 November. So how powerful do you think this value or this knowledge is? Time suggests you there will be a change in trend. Price suggests you there will be a change in trend. What else do you need to know that there will be a change in trend? You have your stochastic oscillator that is telling you prices have the momentum, upside momentum in the prices have exhausted and they will start going drifting downside. What else do you need to know? Isn't that powerful? You are using three different criteria, three completely different criteria to know if this will be a top, if there will be a change in direction of price from here. You are using time Fibonacci, you're using price Fibonacci, and you're using oscillator or a momentum. This is a very powerful trading method if used sensibly. As beautifully works time retracement, so does time extension. Alright, this is daily chart of sale. We have stumbled across this chart before when I was teaching you the importance of 261 and 423% extension, Fibonacci price extension. It is back, and this time we will put it all together to know if price and time were in a position to tell us of a coming top. So I'll put out the extensions. I just want 261 and none else, so I'll keep that. And next extension is 423. I'll keep this one and remove all others. So I have 261 at 110, 423, 112, and next I will use time extension to know if there was a tight time range where prices might terminate. So prices are moving towards these two levels, and the nearest time extension is 161.8 at 11 June 2014. Let's go ahead and add some data, and you can see prices have touched 423 and 261 2 days prior to 11 June 2014. Let's go ahead and add, and you can see prices change their direction. So time extension suggested us that the top will be made on 11 June, but top was made on 9 June 2014 within 2 days of the suggested time. So as time retracement works, so does time extension. So till now we have learned about price retracement ratios and price extension ratios and time retracement ratios and time extension ratios. Both ratios are similar. For example, price retracement and time retracement ratios are 38.2, 50, 61.8 and 72.8. Similarly, price and time extensions are also same, 127, 138, 161 and so on. We have learned price and time retracement and extensions, how to plot them and how to exploit them to our advantage. Now we will put it all together. Let's set some rules. Let's make a trading system. Use MACD on higher time frame to judge the direction. Plot price retracement and extension in every way possible on chart to find a cluster of ratios or a tight price band. You just have to keep on plotting everything everywhere. You'll find a cluster of tight price range, a very tight price range. We will assume that price range will act as support or resistance, and then we will plot time just the way we have plotted price ratios. We'll plot time ratios to see if there is any important cluster of time where prices might change, where time will suggest that prices will change their direction, and then we will use stochastic oscillator to take an entry. Alright, let's go ahead and look at some burning examples. Alright, our first example is of Polaris. Following is a chart of Polaris daily chart for as of the last bar. It is of 20 June 2014. Stock has made a new low. Stochastic oscillator is negative. We'll take a look at higher time frame first. Higher time frame MACD is positive, histogram is positive, and MACD is above its signal line, indicating that the stock must be traded towards its upside. So once stochastic reaches oversold zone, we can look to trade. We can look for a buy trade. But in the meanwhile, I'll plot everything I can to see if there is any valuable level. So let's go ahead. This first one, and prices have reached 61.8. My second one will be an extension from this smaller swing. I'll select extension ratios, ignoring all others. So we have a cluster of price at 190, 192. My next will be plotting time ratios. So I'll use this from this point to this point. So we have three suggestions. First one is a low will be made at 19 June. Second one is a low made at 24 June. So if prices hit this range, and we can draw a square of this time band, price band and a time band. So I've drawn, give me a second, still selecting Fibonacci level. Anyways, so I have drawn a tight price band and a time band, a box where prices might change their direction after hitting that box. So for now, I will take out all other ratios to clear the chart. So that is our box. So what do we have? We have higher time frame in our direction, in our favor. We have a time band and a price band. If prices hit this band, there are higher chances that prices might change their direction. One stochastic gives a crossover after hitting oversold zone. We are good to take this buy trade. You can see prices found support just above the price and time band that we had set for it. Okay, and prices changed that direction. But stochastic has not reached oversold or has not given a reversal trade. So we cannot take a buy trade. Let's go ahead. As of that bar, stochastic has reached oversold zone and given a bullish crossover. So we'll take a long trade, I'm sorry, at this price with a stop at swing low, and our minimum expectation is 127% of this swing. Since 127% is the ratio where maximum number of times prices find resistance, so I want this stock to hit at least 127%, that is 248, or I will be stopped out at 192. Let's go and add some bars. There you go, 127% was hit. So isn't that a powerful method? You had a tight time and price cluster to make a low, and prices obeyed that cluster, made a low exactly in that range, and changed their direction and gave you a successful trade. Let's go ahead and take a look at another example. Our next example is a chart of HDFC Bank. As of the last bar, HDFC Bank seems to be retracing from its upward move, taking a breather. Stochastic oscillator is hanging midways. There is no valuable information from stochastic oscillator. Higher time frame is strongly positive with positive histogram suggesting that only upside trade should be considered, buy trade should be considered. As of the last bar on daily chart, this bar has taken out this low of 720 and made a new low. Alright, now we will plot everything we can to see if we find a tight cluster of prices. So here I'll add one more of 38.2%, that is at 705. The whole number at 700, 38.2 at 705. We have enough reasons that 700 might act as a support. Not enough though. We'll plot more. We'll plot an extension of this smaller swing, minor swing. I'll click this. Okay. So we have a tight price range of 699 to 710 with one of 38.2 and two of minor swing. Let's see if we can find anything, any luck with time. Take this time range and plot. So we have 38.2 suggesting us that a low will be made on 17 April, and 50 is suggesting us that a low will be made on 24 April. But we have a tight box, you can see here, don't we? So I will draw a box for these price ranges and clean out all other things. So I have a box. Now, if stochastic was to reach below 20 or in the range of 20 and prices were to find support at this box, I will take this trade assuming that weekly momentum is in our direction. So let's go ahead, add some bars. There prices hit our box and turn. Stochastic oscillator is very close to 20. It's not in an oversold zone, but it is very close to oversold zone. Prices have made a new low and hit the start of our box on the target. Oscillator has given a buy trade. We might take our chance. Higher momentum is in our direction. We might take our chances and take this trade. We should take our chances and take this trade. Let's see what happens. Okay, I'll buy above this bar, triggered, and I'll place a stop loss on the swing low. My minimum expectation, a high above this, or at least 127% of this swing. All right. So we have an entry, we have a stop loss, we have a target. Leave this trade on auto. Let's see what happens next. Target is met. The prices came down, but we were never stopped out, and prices went up to hit our target. But what is more important is prices obeyed the time and price range that was given to us by Fibonacci ratios, isn't it? Prices respected the time and price range that was given to us from Fibonacci ratios. That is what matters. Prices respected it. Thus you can see Fibonacci ratios are very powerful when used correctly with proper trade and money management technique. So that brings us to a conclusion. We have learned about Fibonacci ratios and extensions, how to use them on price as well as time, and how to combine them with different indicators and time frame to come up with an awesome trading method. Nonetheless, Fibonacci ratios are very powerful if combined with proper trade setup and trade management. Fibonacci ratios can be used on any trading instrument or their derivative, and it works on all of them. Though not every time you will find prices obeying Fibonacci ratios, hence it is necessary to use these ratios with different indicators. Combine these ratios with as much viewing angles as possible and come to a conclusion after viewing from every angle or every aspect of that trade. That concludes our current tutorial on Fibonacci numbers and Fibonacci ratios. Hope this tutorial was helpful to you and you took as much as possible advantage out of it. Thank you.